Hi everyone, Colleen Olivas here with the Brandon Drew Group, a mortgage firm, and Patricia Novo with Novo Realty. And we're here today, we're super excited because we're gonna show you the entire home buying process from beginning to end. And what we're gonna do is we're gonna save you a weekend so that you don't have to get a babysitter, you don't have to waste a Saturday and come in and learn the home buying process. We're gonna put it right at your fingertips today.
Well, we're going to explain the whole process so you know who you need to talk to. So we're going to start with Colleen. She's going to pre-qualify you, tell you what is all in details, and then she's going to hand you over to me so we can start searching, analyzing what is that you can buy and all the process until I give you the keys.
So let's get you educated. We're gonna get started now.
Hello, welcome to our workshop. So this is today's outline. We're gonna have the realtor introduction, that is me, the lending team, the home buyer process, mortgage programs, and parties involved through the whole buying process. So let's start. So who's Patricia Novo? Well, I've been in the industry for many years. I have 13 years that I have my license. I have my profile. So if you want to read a little bit about me, you can feel free and go for it. Okay? The important thing about me is that I dedicate 150% to help my clients. I don't hesitate to put the extra time or effort. So whatever is going to help me to get you the house that you want, that's what I will do. Okay? So as you grow and then you start building a team that it can help when I'm doing other activities. So I have a team that is gonna able to support all your needs. You know, if we need to show 2-3 homes at the same time, well, I have different agents that can help us with that. So it's enough about me. So now we're gonna hand it over to Colleen so she can start the loan process. So there you go, Colleen Olivas from the Brandon Drew Group.
Okay, so thank you so much, Patricia, for handing it over. So who am I? So my name is Colleen Olivas, and I am a lender, and I have been doing loans for a very, very long time. I was an underwriter for a very long portion of my career, and what that means for you is you get the fair advantage of knowing exactly what the underwriter is going to look at on your file when I pre-approve you. So who is myself? I'm married to Robert Olivas, and he's actually been in the lending business for over 30 years. I say over 20 years, and I stop myself there just because I don't want you to know how old I am. However, Robert comes with amazing experience, and we work together as a team on absolutely everything that we do. And the benefit that that gives you as a consumer is that we work 7 days a week. We're always available. He's not concerned if I'm getting a call at 9 o'clock at night. He understands, and I understand vice versa, that if you're calling, it's because you have a question and you need assistance, and we're going to be there to help guide you. So our company, the Brandon Drew Group, a lot of people ask me, why the Brandon Drew Group? What is that name? Why does it make sense? And so our company is a division of American Pacific Mortgage. However, our company is so amazing and supports us so much that we were allowed to name our branch after our son Brandon, who passed away when he was 6 months old. And this is very important to us, that that name just stays pure, everything honest, truthful. And so we make sure that we take care of our clients. And since our son is no longer physically with us, we are able to build a legacy in his name, and we're able to help families just like you get into home ownership where you wouldn't otherwise think is possible. So we do this for him and for all of you. So the loan programs, there are so many loan programs when you're purchasing a home for a first time, and through this webinar, I'm going to explain to you some of those programs: the Cal HFA program, the Golden State Finance Authority, USDA, Chenoa, regular FHA 3.5% down. There are so many different programs, and for you, a consumer, it can feel a little bit overwhelming when you hear I can qualify for this program, I can qualify for that program. And so it's our job to get your loan application and actually go through all of your personal finances in detail and explain to you why you qualify for this specific program versus this other program. We're going to make the overwhelming task a little bit easier on you. So I'm going to talk about first the Cal HFA Dream for All program. So this program is not yet out. Today is March 2nd, so if you're hearing this webinar and it's a later date than this is set to come out on March 27th. And what this program is going to do for you, the consumer, is it's going to help you with up to 20% towards your down payment. What does that mean for you? That means that you're not going to have monthly mortgage insurance. You're going to have a much lower monthly payment than people who buy with low down payment, and you're going to avoid monthly mortgage insurance. Now, with this specific program, you do have to have a little bit of a higher credit score than others. You have to have a 680 FICO score. And let's just say that this is your target goal and this is what you want. With this program, I'm actually going to review your credit, and if you are lower, I'm going to give you the proper guidance on what you can do to get your score up there. Now, when it comes to down payment assistance, there's pros and cons to everything. And so with this program specifically, it does have something called shared appreciation. And I like to share that with everyone because you want to know everything about a program you're getting into. And so shared appreciation, what it does for you is if you, a home buyer, are purchasing a property, let's say that I get you qualified for $500,000. Patricia takes you out, finds you a property, gets you into escrow, and you get your keys to this property at $500,000. If you plan to refinance or sell your home in the future, when you do that, let's say your property is now worth $600,000. That $100,000 of appreciation that you earned on that property, you do have to repay the California Housing Finance Agency the 20% that they lent you, and in addition to that, 20% of the equity that you earned. So $100,000 would mean that the California Housing Finance Agency would earn $20,000 on that. There are some people that say, oh my gosh, I don't want anyone owning anything on my property. And I understand the concerns there. However, just keep in mind that this is helping you get into a home that you wouldn't otherwise qualify for. So it does have benefits. And just like I said, I'm going to share the good, the bad, the ugly, the exciting, everything with you so you make the best decision for your family. On to the next program. So the Cal HFA My Home Assistance Program. What this program does is it helps you with up to 3.5% for down payment and up to 3% towards your closing costs. This program, you only need a 640 credit score, and you only repay this amount when you sell or refinance your home. And so for this program, your interest rate is going to be impacted by the amount of assistance you receive. This program has very high income limits, and if you want more information on what those income limits are, you can definitely reach out to me and I will give you those details. However, like I said before, let us do the daunting, terrible work and all of that task. We'll tell you what you qualify for and what you don't. The ZIP program is what I was discussing previously, so this portion helps with the closing costs. And depending on what type of market we're in, I'm going to guide you and let you know if you need the ZIP program or if you don't. Sometimes you do. If there's multiple offers on a property, you want to be able to cover your own closing costs and not ask the seller for that because it may make your offer just not as attractive. The Golden State Finance Authority. So this is another amazing down payment assistance program, and with this one, you don't necessarily have to be a first-time home buyer. So if you've owned a property in the last 3 years, then you can absolutely use this program still for down payment assistance. So I have a lot of clients who own a property right now, and maybe they want to sell that property, and they want to take all of their proceeds, they want to pay off their debt. So they don't have a whole lot for the next purchase. And a lot of people think in that situation that they're going to have to rent for a while. That's not the case. We can actually qualify you with the Golden State Finance Authority and get you down payment assistance even if you are not a first-time home buyer. There are a lot of different programs with them. There is the Open Door and there is the Platinum. So what I am sharing here with you right now is the Down Payment Assistance Open Door program. And again, we're going to look at all of these for you and figure out, do you qualify for this one? Do you qualify for that one? And which one is best and why? The Chenoa Fund. So this is an amazing program as well. This does help with down payment assistance and closing assistance. I can tell you for the last couple months that I haven't necessarily been putting people in this program. And why? Because the interest rates have just been higher. There are times in a market where specific assistance programs have higher interest rates than others. And then there are times where those down payment assistance programs rates just drop down, and then I will absolutely put you in those programs. I just want you to know that I'm looking at all of those programs for you so you don't have to. So sustainable home ownership is really important. And so one of the biggest things when we're going through these pre-approval options is I'm going to find out from you, what is your monthly payment comfort level? And what do you feel is the purchase price that you're targeting? And the reason I ask those two questions up front is because I may qualify you for several different programs, and all of them may put your monthly payment at $4,500 a month. And you may say, oh my God, Colleen, that's not what I want. Yes, I qualify on paper for $4,500, but my comfort level is only $3,800. And in that instance, I want to know what that comfort level is, because I'm going to show you what that purchase price would look like for you. Because again, sustainable home ownership is extremely important to us. We want to make sure that when you buy this house, you get into this home, that this is something you're committed to, you're comfortable with, and you're going to be there for the long haul. USDA loans. So what is a USDA loan? USDA loans are 100% financing. They do keep your monthly payment very, very low. But the thing about these programs is they're only for specific rural areas. I always get tongue-tied on that word, sorry. But I'm going to show you in the next screen here a website that we go on to see if the property that you're looking at falls within those areas. Just keep in mind, if it's in a populated area, then it's probably not USDA eligible. However, when you go out looking for properties, if we know where your area of search is going to be, we're going to qualify you for this program as well if it makes sense, so that way you can do zero down payment without utilizing any assistance program. There's not a whole lot of areas that do qualify, but that's why you allow us to be the experts. And when Patricia lets us know what your goals are as far as area, then we will definitely try this program if it makes sense for you. The benefits of an FHA loan. So down payment options as low as 3.5%. The federal housing guarantees the mortgage, and what that means for you is basically that the mortgage insurance premium, they actually just lowered it. They went down from a monthly amount of 0.855% to 0.55%. That's almost like a 0.3% interest rate reduction is what that is. So it is definitely an amazing program. You can buy homes that are 1 unit to 4 units. When you do look at properties that are units, you can use the rental income on the other units to help you qualify for a higher purchase price. So let's say on a single family home, you only qualify for $500,000. On a unit property, you're very likely going to qualify for a much higher amount than that, because if you have 3 units, then you have 2 other units you can use rental income on. And you guys know that rent is not cheap nowadays. So now you can become the landlord on your own property that you also occupy. It must be a primary residence. You only have to have a 580 credit score. You do not have to be a first-time homebuyer. This program has often been misunderstood, and people think that if they're not a first-time homebuyer that they can't use this program. That is not the case at all. You can actually even own another property and still possibly be eligible for an FHA loan with only 3.5% down payment. The benefits of a VA loan. VA. So my veterans out there, if you are watching this, thank you so much for your service. We appreciate you. And there are some things that the government has just done right for our veteran clients, people who are currently serving, who are no longer serving. You may be eligible for 0 down payment, 0 monthly mortgage insurance, and you have the most cost-effective loan out of any of them out there. So where you're buying a house for $500,000, you're probably going to pay about $500 less than someone else who's buying a house for FHA loan. So yay, this is an amazing loan program, and if you don't know if you qualify for your VA benefits, allow me the opportunity to see if you do. I can definitely pull what's called your certificate of eligibility on your behalf and tell you if you could get qualified for this program. There are low fees, no monthly mortgage insurance, there's no loan limits. I have helped people buy homes for $1.5 million with zero down payment who are veterans. Not saying that that's you, not saying that that's your goal. However, it's amazing. You can do zero down for such a high purchase price. And I hear a lot of people that say, oh, it's harder for a seller to accept an offer on a VA loan. That is absolutely inaccurate. When you have a real estate agent who has passion about veteran financing and VA home loans, when they're submitting those offers on your behalf, they make sure that the listing agent knows that their seller will not pay a dime extra for getting you into this home. And then we go that extra mile, and Patricia will CC me in all of those offers. I'll reach out to that listing agent, let them know the strength of your loan file and how easy it is to get this loan closed for you and why they should accept your offer as well. With a VA loan, you only have to have a 580 credit score. So if you think your credit is not good enough, you're probably wrong. And if you're not there yet, just allow me the opportunity to help educate you. Because one of the most important parts about getting pre-approved is analyzing your credit. And everyone thinks they're experts now, right? Because we're looking at credit scores on Credit Karma, Experian, all of our credit cards. And so we think that we know how to fix our credit. Stop right there. Do not do anything to your credit until you talk to me, because there's a lot of things that I will tell you, do not touch that. Pay attention to this instead. So let's have a conversation about that. The benefits of conventional loans. So there's a lot of benefits. As a first-time home buyer, a lot of people have a misconception that conventional loan means 20% down payment. That is not the case at all. You can do as little as 3% down payment if you are a first-time home buyer. You can do with monthly mortgage insurance or with upfront mortgage insurance. It can definitely be used on 1 to 4 unit properties. You can utilize the conventional program with down payment assistance as well. So don't think just because you're getting down payment assistance that you are stuck to an FHA loan. That is not the case. Not that FHA is bad, because I love FHA loans too. And so a lot of times people don't realize how many people are involved in the home buying process. There are a lot of people. So you have your realtor, Patricia Novo. You have your loan officer, Colleen and Robert Olivas. You have your underwriter. The underwriter is what I discussed earlier, the person behind the scenes that approves the loan file. And see, let me talk a little bit more about the underwriter, because as I told you before, I was an underwriter for a long portion of my career. And what I used to do is I used to look at those loan files, and I would wonder why the loan officers would put people into specific programs. So I would go back, I would restructure the file, send it back to the loan officer and say, hey, what are you doing? You're not saving the client enough money. Put them in this program instead. I can tell you there's not a whole lot of underwriters out there like that nowadays. They just get your loan file, they either approve or they deny. So it's very important to make sure you have a good loan officer that's going to put you in the right program. The escrow company. So the escrow company is a neutral party. They handle all of the money. The title company is the one that checks the title to your property, make sure it's clean. The home inspector, that's very important, and Patricia will introduce you to a great home inspector. They're going to be the ones that look over the property in detail with their microscope and make sure that there's no major issues. We all know when you're buying a property that is a resale that someone's lived in before, there is nothing perfect, and it will never be perfect. But they're going to look for major issues, because if there's a major issue, Patricia wants to make sure that you avoid those major issues. And so you have the choice to order a home inspection or not. And Patricia will tell you to definitely do that. The appraiser. So a lot of people get those two confused. The appraiser is just there to make sure that the property is worth what you're buying it for. And the reason that they do that is because we, the lender, we're lending you a big chunk of change, and we want to make sure that the property is actually worth what we're lending you. So that is the sole purpose of the appraisal report. The termite report, so that is something that you can or don't have to have, and Patricia will give you guidance on that when the time comes. The insurance. Insurance is very important. Once you get an accepted offer on a home, we will help you get some insurance quotes. We do not recommend anybody specifically, but it's important that you shop and make sure you're getting the best coverage for your home and the most affordable. And you're going to be the one that makes that decision for your family. The home warranty. Patricia will always ask that the seller cover a home warranty for you. And it's really important that you look at your home warranty and you see what it covers. Because a lot of people think, oh, a home warranty, okay, it's going to cover everything from the top to the bottom. That's not necessarily the case. So you want to read your home warranty and see exactly what it will cover for you. And the seller. Of course, there's a seller because they own the property currently, and they're the one allowing you the opportunity to purchase that home and now make it your own. The realtor responsibilities. So I like to pretend that the realtors have all the fun job just showing you properties, but in reality, they have a whole lot of work to do. There's a lot of contracts that have to be drawn up. There's a lot of timelines that have to be met. There's contingencies that are in place, and it is their job to walk you all the way through it. Patricia will take excellent care of you. She's been doing this for a very long time, and when I say she cares about her clients with her whole heart, I absolutely mean that. So they have a fiduciary responsibility to hold up and advise you of your disclosures and your accounting, and absolutely be loyal to you, the buyer. They represent you. They handle everything with care and diligence and confidentiality and obedience. So in other words, they're not going to share your information with anybody else, and they're going to take very good care of you diligently. The lender's perspective, steps to getting qualified. So when you're going through the pre-approval process, which is what you're going to do right after this video, first you're going to apply and you're going to provide me with all of your income documentation and all of your asset information. There are some times that buyers will withhold information because they think I'm not going to show them specific programs if they have more money. That's not the case. I want to be able to utilize everything that you have and show you your options. I will show you the lowest out of pocket. I will show you the lowest monthly payment. I want to be able to use all of your specific finances to give you all of your specific situations. So you go through the pre-approval process. Once I say you are good to go, you have that green light and you are pre-approved, that is where Patricia takes over. Like I said, she gets the fun part, right? And she's going to take you out and she's going to show you homes. She's going to make that offer and she's going to get it accepted for you. Once that happens, then you go into the loan process where you're actually going through all of your disclosures, your processing, your appraisals and your inspections, your underwriting completely, your final approval, your closing disclosure, your final loan documents, and then finally your funding and closing and keys. Qualifications will drastically vary from person to person, and this is a misconception that I see with a lot of clients. They'll say, well, my brother Joe makes more money or less money than me and he got qualified higher. Well, Joe may have less debt than you. He may have a different credit score than you. There's a lot of things that could come into play. So just, you have to trust in your team. And if you don't trust in your team, then you're not working with the right team. So allow us the opportunity to earn your trust. This is just information about the differences for a new build. So a lot of times people get pre-approved and I say, okay, guess what? You're pre-approved for $500,000. But then they go to a new build and the new build could have a whole 1% higher in tax rate. They could have an HOA. They could have a lot more things because they are new homes. So when you're qualified at $500,000 for a resale property, that does not mean you're qualified for $500,000 for a new home. So if you are thinking new home, make sure that's something you discuss with us up front, and make sure that you do not walk into a new build without Patricia Novo next to you. And the reason I say that is because as you walk into that new build, then you are going to lose your opportunity to have Patricia Novo represent you. Now I'm going to discuss with you front-end mortgage rate, or I'm sorry, front-end ratio. So what the front-end ratio is basically all of your income versus what the new housing payment is going to be. So you see, this means that your front-end ratio cannot exceed 45%. Your back-end ratio varies depending on program. So you can go from a 45% maximum back-end ratio to a 56.99. So you say, well, what does that mean for me? What that means for you is if you want to get a higher purchase price and we have your debt ratio at 45, the only way to get you into a higher purchase price is to go with the different program that allows for that higher debt ratio. So I know this is a lot of information that you don't necessarily need because we're going to do the due diligence for you and we're going to show you all of those programs, but we just want you to understand why qualifications can be so different from one borrower to the next. So the front and back end ratio, again, this is just telling you that if your qualifying front end ratio exceeds the max, then we're going to have to pull you back down. If you're fine on the front end ratio, but then your back end ratio exceeds the max, we're still going to have to pull you lower. So we'll work on all of that for you. Another thing that a lot of people ask is about co-signers. So they say, what's going to happen to my co-signer? If I get someone to co-sign for me, is this going to help me? So the pros of this is you will qualify for a higher purchase price. It can strengthen your loan file, especially with conventional financing. You can have a co-signer who is occupying or not. What are the cons of a co-signer? If they have a lower FICO, then that can affect your interest rate. Most programs do not allow for a non-occupant co-borrower for down payment assistance. FHA loans, conventional loans, where you come up with your own 3% or your own 3.5%, then you can have a non-occupying co-signer. In regards to the co-signers, I'm sorry, I skipped screens there. The co-signers' obligations, they are financially obligated just like you. So a lot of people ask me, what will it do to my co-signer? Will it hurt them if they want to buy another house? And the answer is potentially yes. However, once you go through 12 months and you can prove that that co-signer has never sent you money to make that mortgage payment, we can provide 12 months proof that you make the payment, and then that co-signer can go look for another mortgage loan and show proof that they do not make that mortgage payment. And on the opposite side, if you fall behind on your mortgage payments, then it will impact them financially as well because they are signing and committing to make that payment should you fall delinquent. So now you're in escrow and you're going through the whole home buying process. What is title? So like I had mentioned before, I had kind of gone through all of these screens for you about the home warranty, the title, the home insurance, all of that. I did those in previous slides, so hopefully I shared that information well. And if you have any additional questions, then we are definitely here. Your next step, what do you do now? Now is time that you need to apply. So we do have the link for the home loan application. Once you do that application, as I mentioned before, we are going to go through all of your options. We're going to prepare them for you, and we'll schedule it either in person, Zoom, whatever's most comfortable for you. We're going to schedule that and go over all of your options specifically for you. So let's get you qualified today, and thank you so much for listening. Thank you so much for joining our webinar and learning the entire home buying process from beginning to end. And now that you're educated, let's take you on to the next step and let's get you pre-approved. The link is below for the loan application. Once you complete the loan application, we're going to explore every single option that fits your specific financial goals.
Once you finish that boring part, important though, and then we'll start the fun part that is going to go in preview homes, find exactly what are your needs and what it fits your budget. And then we'll get you until the point that we'll hand over the keys.
Yes, let's get you started.